Are you still digging through your old wallet for cash while others flash their digital wallets? Banks are taking notice as Apple Pay, Google Pay, and PayPal change the game. The financial landscape is changing faster than you can say cash is king. The advent of new financial technology has got Chase CEO Jamie Dimon sweating bullets, and for good reason. One of the biggest threats to traditional banking as we know it is none other than the tech giant Apple. It's no secret that Apple has been encroaching on traditional finance territory with the introduction of its digital wallet, Apple Pay. But what makes Apple Pay such a formidable foe, you might be asking? Well, for starters, it's activated on a whopping 78% of iPhones in the US. That means if you're rocking an iPhone, it's harder to avoid using Apple Pay than it is to avoid your ex on a bad hair day. I don't know if that joke lands with everybody, but I like it. But it's not just the ubiquity of Apple Pay that has traditional banks quivering in their boots. It's the fact that they actually have to pay a fee for every transaction with Apple Pay. Say what? Yeah, no, you heard me right. Banks agreed to pay a fee for every transaction made with Apple Pay, making it the only digital wallet to have such a perk. Now, you might be wondering why banks would agree to such a thing. The answer's simple. It's interchange fees. Banks make money on debit and credit card purchases from interchange fees, which merchants pay to the bank that issued your card when you shop with it. Those fees can range from 1% to 3% of your purchase when you shop with a credit card. So if you buy a cup of coffee for $5 and your credit card is 2% interchange fee, the bank gets a cool 10 cents. It turns out that when we use Apple Pay, the banks have to shell out 3/4 of a cent to the Apple for every transaction. And you thought that you were just being a savvy tech user, but here's the thing. Those small transaction fees really add up. In fact, Apple raked in a whopping $782 million from Apple Pay last year. Now, at first, banks were willing to play ball. However, we believe that it's better to be on board with Apple Pay than risk getting cut out altogether, right? But as those transaction fees keep piling up, banks are starting to feel the burn. And it's not just about the money, it's about losing their good name to a tech giant. Let's face it, it's not enough for banks to be the underlying card in one of these third-party wallets, but they want name recognition, goddammit. But if they keep losing ground to Apple, then they could be in real trouble. The concern is that eventually we'll have a tech company that's actually the lender and the banks will be left behind. Just kind of funny to think about. But wait, there's more. Apple isn't content with just raking in the cash from Apple Pay. No. They have even bigger ambitions when it comes to consumer payments. It's enough to make you wonder if we're all carrying around iPhones instead of wallets in the not-too-distant future, you know? And who knows? Maybe we'll be trading in our bank accounts for Apple accounts. Ooh. Apple's really not done taking over the payment game just yet. You might remember when they teamed up with the Goldman Sachs in 2019 to create the Apple Card. Well, now they're rolling out their very own Buy Now, Pay Later program. Move over traditional banks and finance institutions because Apple Financing LLC is really taking the reins as the lender. And let's be real, who wouldn't want to engage with Apple for all of their payment needs? Who wouldn't? But wait, there's even more! While Apple continues to revolutionize the payments industry, banks are not taking this lying down. They've been busy creating their own tap-to-pay cards with similar technology to your phone. Because, let's face it, convenience is king. And we will go to any lengths to achieve convenience. And now they're preparing to give Apple a run for its money in the online payment space with their own digital card called Pays. 7 major banks are getting in on the action, allowing customers to access eligible debit and credit cards with just an email. But the ultimate test will be if people actually use it and if merchants are willing to accept it. It's deja vu for the banks as they make another attempt at launching their own digital wallets, but let's be real. They haven't exactly been killing it in the past. Chase even had to throw in the towel on their own app, Chase Pay, citing iPhone limitations as part of the reason. Meanwhile, consumers are already used to swiping their virtual wallets with Apple Pay or PayPal. Banks have been struggling to compete with tech companies that aren't content with just payments but want to create apps for all financial services. The battle between these two camps is very fierce, and it's really anybody's guess as to who's going to come out on top. The only certainty is that they'll continue to slug it out until one emerges victorious. The consensus among experts is that a select few super apps will eventually rule the world when it comes to consumer payments and financial services. And right now, those contenders are duking it out to see who's going to emerge victorious. It's like a heavyweight boxing match, with tech companies and banks throwing punches and jabs to see who's going to come out on top. Who will be the last one standing? Only time will tell. Anyways, get hyped for more thrilling episodes. Subscribe now and click on the exciting video thumbnails for more. Aren't I just a goofy goober who does such goofy gooberous things? Okay, bye.